In this video, I'm going to talk about have realistic expectations in trading. What does that mean? Stay tuned. Hey traders, a very warm welcome to you. So we see this all the time, have realistic expectations. What the hell is a realistic expectation? You see people out there with all these cars and villas and all this kind of stuff. You think that must be possible, right? Of course it's possible. And why would we not believe that it's not? Guys, it is like any other business. If you're at the top of the game, you're going to make the money and you can spend it on whatever you want. You know, if you put, to me, it just seems silly. People putting cars and villas up. Yeah, we know. If you've got money, you can spend it on what you like any business. If you're making good money, if you're making good money as a doctor, dentist, lawyer, trader, business owner, you get to spend money if you want to do that. It just seems ridiculous. Anyway, have realistic expectations. What do I mean by trading? So the point is this: if you're starting out with a £1,000 account, for example, 1,000 euros, whatever it is, if you're risking £100 per trade, if you want to try to make £200 per trade and you're risking £100 per trade, chances are that's going to be blown up. You're going to blow up just from pure statistics. Okay, so for you to say, okay, you know what, I want to double that in, a month. Yes, it's possible. It's definitely possible. It's definitely possible. However, expect that you could blow up, because to double in a month, you're going to have to be, either doing a lot of frequency, you're going to have to risk quite a lot out there. Something is going to have to happen to make that, to make you double. So you need to understand that if that's your goal, expect this to maybe halve or even completely blow up. Your swings are going to be huge. So this is my point, this is not a classical video of, hey, you've got to risk this and risk that. You risk whatever you feel comfortable with. If you want to risk 500 quid on a trade, that's fine. But the realistic expectation is that you will go to zero very, very quickly, because it's not going to take you very many losers and you're putting a lot of it down to chance. If you're happy to do that and you understand that, then that's cool by me. I'm more than happy for people to do that. It's when people say, hey, you know what, I want to try and double that in a month, and then they get surprised when they blow up, or they get surprised when they've got 100 quid left. You shouldn't be surprised by that. Equally, let's flip this for a second, guys, and it's exactly the same thing. Someone who starts out with £1,000, yeah, and he's risking, I don't know, £10 per trade, okay, and then he's expecting to double that in a month. Sorry, mate, it's not going to happen. You're not going to make, unless we're talking some sort of very high frequency thing, you're not going to turn that into £1 million in a year if you're risking £10 per trade. If you want to play that game, then you're going to have to up your risk and accept the expectation that comes with that, the risk of loss. So my point to you is there's a fine line between the two. You get to a point where you've only got a small amount of money. You need to kind of learn the craft. You need to understand how to trade, learn the skill, because there's really no point in being extra aggressive and dialing up the potential for catastrophic loss or for complete damage of your account if you're literally putting it all down to luck. You have to have some skill there. So let's assume now, I'm going to make the assumption that you've got some skill, you've got a strategy that's working. So your decision to make is this: you've got your kind of scales here. You've got, on this side, you've got money. On this side, you've got time, right? Now, you've got to make a choice. You can carry on trading and say, hey, I'm going to risk £10 a trade. But, for you to get to a decent size, even if you're, kind of adding that and then maybe you're doubling it as the account size grows, that's going to take a long time. And it's never linear, guys. I know this. I know the score, and you know the score as well. Your account growth is more like this. You'll have bursts, consolidations, downtimes, ups. The myth of this kind of growth, it does happen in periods. Of course it does. And you can find periods where it does. But at some point, you'll have a drawdown or you'll have a consolidation as market conditions change. It's the way it is. Even if you go on some of these kind of accounts where you can follow people, you'll see these. But at some point, it will change. It just always does. You've never seen someone do that kind of growth for long, or very, very rare anyway. So my point is this. Let's go back to the original point. The point is this: having expectations to what you want to do, and it works both ways. If you're risking a small amount of money, you can't expect to make a big amount of money. You have to, at some point, risk more, but then accept the responsibility that comes with that and say, you know what? My account is now 10 grand. I've managed to put up to 10 grand over me. I want to really push the throttle down. I want to really kind of make a living out of this. and thinking, okay, well, if I need to make 30, 40,000 out of it, I need to be doing something aggressive. I need to be prepared for it to be wiped out, because I can't be risking £10. I can't be risking 20, 30. I need to be risking more. So it works on, and this is the scale that you want to look at. It's like time versus money. So don't be surprised if you blow up because you're risking £100 a trade on a £1,000 account. Don't be surprised by it, but that is giving you the opportunity to have a big boost in profit and boost your account to a higher level. Similarly, if you're risking, don't be surprised if your account stands at 1,200 quid after a year if you're only risking £10 a trade, because how can you expect it to grow? If you've wins and loses, a slight edge, you might be up by a little bit. And you've got to decide whether that's, we go back to other videos I've done of kind of, if you're learning the craft, then definitely would say, keep it small, keep the position size small. If it's a learning process and you're literally saying, okay, all I want to do is learn, then you need to keep it as small as possible, and your capital is there just as a learning tool. If you're now in a position where, hey, I want to make some money out of it, then the decision comes, hey, do I risk more and potentially have decent loss that comes with more risk, or do I take it steady and try and build the account over time? That's up for you. It's a personal decision. It's up to how much you're risking, what your strategy is, how you feel about trading, all those kind of things. But I think that's something that's not talked about, realistic expectations in terms of both ends of the scale. You're not going to make millions and millions by risking a small amount of money. Similarly, if you're risking large amounts of money, you need to expect that at some point your account's going to get hammered. So 2 things up for you to work out where you sit in that. There's probably a kind of level that's suitable for someone or the other. Most people, I think, flip to the other way, and they kind of risk too much and then they blow out and they haven't got anything to refund it, and they get sort of angry when they blow out. But in reality, it's just because you're risking too much because you're trying to make money. But there's the consequence you take. Having a realistic expectations in trading is key. Take care, guys. See you in the next one. Bye-bye.